All right. Good morning, everybody. So it seems like we're still in a wait and see pattern, continuing to maintain this box that we've been in. It really feels like a market waiting for a reason. We see a little bit more on the China COVID zero, where they continue to ease up and back off. They're just minor things. But I'll continue to stress that there are two main threats to an upside catalyst, right? One of those threats would be if China completely abandons COVID zero in one fell swoop. That very likely could cause a significant rally. Not sustainable, right? But probably enough to rip apart a lot of short traders. The other one would be any meaningful reduction in the war between Russia and Ukraine. Those two are the main threat events to a surprise upside move. So you want to continue to monitor anything that connects to those two. We got a lot of economic data coming in today. This is not a day where you're going to want to play a lot of 0-day opportunities. It's not that you can't, right? It's the idea that if you have scattered economic events throughout the entire day, then, you know, every hour or so, you've got this threat potential. And for 0-day traders that are using sell to open, most of you are going to the edges of a range, you know, and using deltas somewhere around 25 or less. So on a day like this, with the catalyst threats from different economic events, easily get tagged. You can't get far enough away. Not a lot of speakers today other than a Bank of England speaker at noon. And we do have additional auctions today, including the 1 o'clock auction. So this is, I know it seems like I'm the only one that ever talks about these things, but this is your last threat on the day. So if we can get through tips, say by 1:15, maybe 1:30, if you haven't really seen a significant shift in market sentiment, you could get the afternoon 0-day on at that point. So we had a nice little Busby kind of complete the move yesterday. Keep in mind the candle under measure is still this really big red day from the 15th. $39.75 is still that line in the sand, 50% of that big candle. So any kind of price swing, we don't want to see it breach through that level. All right, volume's a little light this morning. If we didn't have a lot of econ on deck, we would want to find out why the volume is so light. But, you know, we just covered that, so it's not a surprise. I continue to bring this up. It's something that we just look at real quick. It either demonstrates that we're within the normal range of the overnight volume, or we're looking for it to be really heavy or really light on a day where it shouldn't be, right? Today, we don't need it. We know we've got econ and the market's likely waiting to see what that is going to be before making any significant decisions. We had a muted IB. It's initial balance between the 6 o'clock and the 7 o'clock hour. Consider it a lot like an open range. The difference with an open range, however, is that you choose the time. You know, a 5-minute open, 15-minute open, 30, whatever you want. Initial balance is 1 hour. You don't get to choose. Once we set the open range, throw it across for the day, and we're basically looking to see if it was a really narrow open range or a very wide open range. And then where are we now from that? The next one would be a move through the kill zone between 2 and 4 a.m. Historically speaking, throughout history, the biggest moves in a 24-hour trading period happen between 2 and 4 a.m. I've heard it called the kill zone. I've also seen a couple other nicknames for it. Call it whatever you want. The main thing is to focus on, was there a big move? Because if you see a significant move in that spot, it can cause a liquidity vacuum, and we end up, working back through that to close the gap. We don't have that issue today. Not a big deal. We are still sitting below yesterday's level, below yesterday's high, and we are below the Globex open. We are inside day below the daily pivot. We were MDP until around 6 o'clock this morning when we hit it. MDP would be a missed daily pivot. $21-day ADR is 1.93. It's very close to a 2% move, so around 75 points. We don't have a market maker move this morning. So half of this ADR to the upside would be 39.50. If we worked through the weekly pivot, then we would have 39.90 for the full ADR. And to the downside, 38.77. Getting through the previous week's low, and then a full ADR at 38, call it 38.40. I started this stream saying we are right where we were, and that's kind of a reflection on yesterday's price action. We're sitting inside of that, and while there is enough room, it's a wide enough range that we could see, some reasonable trading today, some decent trading. When you're trading inside of a previous day, it tends to be choppy, quick reversals, things like that. If we look back, say at this trading day, there was opportunities, sure, but it was sitting inside of a previous day, and so it wasn't as clean. There was, sharp reversals, big wicks. It's just harder to trade. Yesterday, when we broke out and we were no longer dealing with yesterday's range or the Globex, had that nice one-time framing all the way through the morning session, right? So if we maintain inside of yesterday's range, it's very likely going to be that same choppy, wicky, quick reversal kind of stuff. Tradable, but if you're newer to trading and you're still struggling, you're going to want to avoid the most difficult of all the trading, right? Do the easy stuff. If we continue this fade to the downside, our next pivot, very close to the ADR half, will be the cash open of yesterday. They line up really nice. We are outside the box that we've been dealing with for a while now. Getting a nice little Busby on the bottom of it. So we're still in that argument about, are we going to see a Santa Claus rally? And keep in mind that the Santa Claus rally happens in the last week of the year and into the new year. It doesn't happen before Christmas. Don't take my word for it. If you were to go out and Google Santa Claus rally, there's been articles and blog posts and a lot of research done on it. You can find out for yourself. All right. So we still have that capacity or that chance that it could happen, but you got to kind of argue, where would it come from? Right. At this point, we've covered, the CTAs and the massive rotation back through bonds. What would be the buying catalyst at this point? $10-day, 30-minute volume profile. When we're at the top, we expect to go to the bottom. When we're at the bottom, we expect to go to the top. To make our transition from this low back to those highs, we have a point of control at 39.69, which matches up with a TPO point of control at the same spot. It would be a significant level of resistance to get through. To the downside, 38.60 is really working on becoming the new point of control. It's not there yet, but I would not be surprised if when we trade back through this zone that we end up making that the new point of control. It almost made it. Keep in mind that's not going to be support. It's not a handrail to lean on, right? It's very much more likely a first touch bounce, a reactionary spot where price could consolidate, pause, catch a little bit of consolidation there before either rallying back up into that resistance or breaking through it, and then we really start to get wild. Mapping out a 5x5, got a 5-day, 5-minute chart. This is where we carry forward the previous day's point of control, value area high, value area low. I generally don't carry forward the value areas since they almost always line up really close with the previous day's high and low, and I'm already focused on those highs and lows. The one that I care about, or the one that I tend to carry forward more often, is whether we had an untouched point of control or not. We have one back here for an example from Tuesday. We would want to carry this forward, and it's 38.50. So not only is it a point of control that we have not come back and revisited, it's also one of our major significant pivot points. This has been, a number that we've interacted with multiple times this year. So we want to get that marked out. Should we travel down through that area at 38.50, we're going to expect a reaction at a price at that level. Again, this isn't a spot for support or resistance or, a supply and demand, more of a place where we expect price to respond to a pivot point. Generally, a first touch play is what I focus on. We don't really need to ask the question since we know we didn't really go anywhere, but keep with the habit. Are we overbought? Are we oversold? Have we traveled too far, too fast? And are we looking for a reversal at this point? Nope. If you think about the mean and moving one standard deviation in various directions, price waves back and forth, the 10 period acts very much like the average price. So how far away from the 10 a market gets can help you identify how far we've traveled, if we're getting into that overbought or oversold. So I built this indicator to measure that for us. Starting with the weekly, if you think about a basketball game, it starts in the middle, right? And a lot of your indicators do the same. RSI, MACD, starting in the middle and then traveling either direction to the edges of the court. For price, we're just looking to travel to the edge of the bands. The farther away from 10 we get, the more likely it is we're going to pause, consolidate, reverse. Every market has that distance that is unique to that market. So with an indicator like this, we can ask the question, where has been the average reversal when we've extended beyond the 10? To the downside, the average is around 5 for a 10-week. And to the upside, it's around a 3. So a 3% move beyond a 10-week moving average is generally just about as far as the ES likes to go before it starts that pause or that consolidation. We're very close to the 10-week, half a percentage point away, not even 1%. So we're very close to the center of the court, meaning we could make a big move in either direction. Getting away from the 10-week, dropping down to the 10-day, have the same discussion again. We're very close to the center of the court. So we're underneath it less than 0.75%. The average downside before we begin to pause or consolidate is around 3%. So we've got plenty of room should the market begin to make a big swing either up or down. We've got plenty of room before we even consider the idea that we're overbought or oversold. The swing low is still in effect. And generally we get what we give. So, a 3% move on one side of the regression line, you're very often going to get the same 3% on the other side, or 2% on one side, get 2% on the other. So we've completed the upside swing. We're working on our way back down. It's a little bit different than what we've seen throughout 2022. These highs have been nice, clean, clear reversals. This one, however, has been this struggle to really turn back and go the other direction. Now, there's a lot that goes into the why on that. What's been happening since the first week of November with that explosive move up, and then just working through all of this. There's a lot to why we didn't just roll over and head back down. But at the end of it all, it doesn't really matter because we finally are heading over and back down again. It's not guaranteed that we're going to complete the swing, right? Nothing is always going to work all the time. But until something changes that says we need to throw this out, we're going to continue to focus on it and say we're working on our new leg down, right? That we're going to cross through the linear regression line and at least get some matching lows, if not new lows. Surprisingly enough, natural gas is barely down this morning. It's been a wild ride over the last few weeks. In the pre-market, we generally come in and see this thing has made 4% moves in one direction or another in the overnight hours. This is one of those names, that fits that that discussion we had a while back about, entering trades before the close with an idea of getting out of them after they open the next day, because their overnight moves are bigger than their daytime moves. This would be one of those names. But we really didn't get much of a move last night in natural gas compared to what we've seen lately. My benchmark for looking at things in the pre-market is that it needs to have moved at least 0.5%. And looking at things that are down this morning, a lot of these we wouldn't really focus on anyways. Double and triple leveraged products, volatility names. But a few of them up there, semiconductors, natural gas, gold. Now, never mind, gold's below the line. So natural gas and semiconductors. Take it to the other side. The China names are up 1.5%. And when we see that, we also want to make sure we're getting the same kind of or an equal play out of emerging markets, and we're not yet. So kind of want to keep our eye on that. Make sure emerging markets gets in the game. And that's it. The rest of these don't even make the 0.5% that we would want to use for a benchmark. ENPH got a rate change. It's kind of a really muted morning, you know, in the grand scheme of things here. It's a whole lot of wait and see, kind of give me a reason sort of morning. It's very likely that we're going to see some sympathy move from the MU earnings. You see NVIDIA's down, you know, near 1.5%. AMD down more than 1%. Surprisingly enough, the airlines are down this morning. CarMax is sitting down around 151. So if you think about a regular typical double bottom, we want price to go lower than the previous low, right? That's what they're designed to do. A good double bottom should not bounce right at the previous pivot point, but it should break through and go lower first, trapping traders and then running back up and squeezing them for a good, clean, explosive move to the upside. So CarMax this morning is going to open below this previous low, down around that line that I just drew. They're not good. the earnings on this isn't great. I haven't read it yet, haven't checked into it, but just the idea that it's opening down that low says it wasn't good. And yet it might be a nice double bottom reversal play. It would be worth, if you're looking for an opportunity in this, to check out what's up with the earnings, find out what was said that that investors didn't like. A lot of times the first reaction isn't the one that sticks. Now this has been, consistently heading to the downside all year. So it's not like we're suddenly looking for it to turn around and be a good trade long term. If the earnings show that this is not going to be a really good double bottom bounce with a rip back up, it continued to move to the downside from 51 this morning. We focus on that COVID low, right, around 40. All right, we got Netflix up in the pre-market, looking for an inside day breakout here. It needs more than that though, right? We start with the inside day breakout, and then as we get into the open, if it's beginning to fade back, the line in the sand first becomes yesterday's high. And if we continue to see the fade beyond that, then yesterday's close. It should not get below 298 if we're going to keep that bullish posture here. The reset on this is back to around 315. So plenty of move back up. And, considering this move happened in like a one-time framing style move, it's very likely that there's not a lot of volume nodes or volume resistance through there, right? We should be able to move through this area relatively quick. Your first area of even potential resistance would start around 305, 307. We do have a gap to close. Now I marked the open from the gap. It's likely going to be a bit of a resistance. Then we'll get into the channel. Then we focus on 317.83. We're not going to make this kind of move in one shot, right? We're not talking about making all of that in a day. But with this inside day breakout and this really nice reversal off the lows here, the idea is we're just looking for that continuation back up to get the gap closed. If we look a little bit wider at the whole range that we've been messing with, we're still in the middle of all of this, right? Now we talk about don't diddle in the middle. But for an intraday play, just for some day trade kind of stuff, or get in today and maybe get out at the end of the week style, pushing to get back up to 317, 320. I mean, it's not a bad play. Keep in mind, 310 is going to offer you a little bit of trouble. And other than that, once we get above yesterday's high, we don't want to see this thing come back in and drop back down below the close of yesterday, 298. All right, so there's the sympathy that we were talking about in the chip names. Nearly every name on the list is down at least 0.5%, which is my benchmark, or more. The only two holdouts are Taiwan Semiconductors and Texas Instruments. A lot of our Bitcoin names are up this morning. Now, this list of crypto comes from a crypto futures product that the Smalls Exchange had made, right? They were running those crypto smalls, and it was basically like an ETF style product. Well, an ETF is a basket of something, right? So we open up the basket, see what's in it, and these were the names that was in that basket. So I turned them into the crypto list. It's kind of diverse, got some names that you wouldn't necessarily associate with crypto, but it's not all just crypto, right? It's a bit blockchain and no, not my list, right? So not a surprise the chip names that are in that crypto list are down. But on the other side of that, MSTR, Coin, you got a couple that aren't at that 0.5% yet. This is some really muted price action. And just like anything else, if you force compression in it, it starts building up energy. I know energy is not necessarily a word we use much in analysis, but after that RSI Laguerre indicator came out, about a decade ago, it really changed the dynamics in the analysis, where we focus on things with energy. The idea would be that the longer we stay sideways, the more energy we build up. This is also the same kind of logic as an IX10 setup. So we're going to be looking for either a TRB here, trendline breakover, or a significant breakdown with 155 as the next level to the downside. On these TRBs, you don't have to jump the gun and get in early. The move that comes from a a TRB with an IX10 is usually 3 or 4 times bigger than the biggest candle in the last 10 sessions. So, kind of looking back, we got a 7% on 12/16. It's a pretty good sized candle. And it's not even counting, where we had closed the day before and made the whole move. That'd be more than 8.25. So you don't have to jump the gun. You don't have to get in early. You could let this cross over, begin the move back up, even wait for it to break out of the top of the box before getting into it. It would certainly be something I would keep on my list. There's a gap close at 188 and another one at 203. I like this one. This one's got some potential. As it has been most of the year, energy and finance. Energy and finance. It seems like I've traded more of that this year than anything else on the intraday. So ExxonMobil is the odd man out this morning. There it goes. I guess we had to just give it a minute to update. Williams Company is the lowest end of this model. So we get a lot of the same setup here, right? These charts, these are all lumped into the same category. They've all got really similar charts. We're on the weekly time frame, and we're looking at most of these holding at or near that 50. Some are doing better than others, right? Like MPC here. There's a 52-week high strategy that focuses on a market that sets a high, pulls back off of it, eventually runs through it, sets a new high, pulls back off of it. And we're looking for that next follow through, right? It's just the same thing that we've been talking about. Linear regression line, sweeping back and forth from high to low. So we're getting that sweep to the downside. We're focused on the next run back up. But it's not going to move in isolation, right? We're going to need all of energy making that move. Looking at the EV market, the legacy names, General Motors, Ford, they're down today. It's nearly the opposite of what we were looking at yesterday, right? With Ride, Li Auto, NIO in the green, Ford, GM in the red. And keep in mind, we've seen KWeb and emerging markets up. So it's going to make sense that these China names, the China ADRs, are up. We got absolutely no help out of the financials at this point. If we're going to see a rally today, we need one of the 3 major risk-on sectors to make that upside move, right? And like I've always argued, there really is only two main risk on sectors, and the third one is more of an assistant, right? So when you got consumer discretionary and finance or consumer discretionary and technology, that kind of combo is enough to keep us afloat. But when we have all three together, that's where we get those real solid, high correlation coefficient rips to the upside. We don't have finance this morning, so we need this to turn around or pick a side, because we're really split. You know, it kind of stands out here, the difference between these financial names. They all need to get into the game together in the same direction. Not seeing what we're looking for in the pot stocks either, so wouldn't really want to go in that direction. So natural gas and solar is down on the energy side with a little bit of divergence. We ignore cloud because that thing like never gets pre-market trading. It's very likely still showing the after hours from last night rather than the pre-market from this morning. Silver and gold, we would circle back and look at the FX markets, see what's going on with US dollar Japan. Seeing that they're down, it's very likely we're going to see US dollar Japan up this morning. On the other side of that energy discussion, XLE, XOP, USO. So a whole lot of hurry up and wait. So with that in mind, what we're looking at here is the S&P 100, and we're asking how many names in the S&P 100 are down at least 0.5%, just to kind of get a gauge on how bearish it is out there. It's only 10 names, and some of these are connected to the sympathy move from Micron. So Texas Instruments, well, all these semiconductor names, right? We can see the industry there. If we set that aside, then we're still looking at GM and Ford and Meta. I think FedEx is still catching a little bit of pain from earlier in the week. So we take it in the other direction. And remember, the difference between the S&P 100 and the NASDAQ 100 is the NASDAQ 100 doesn't have financials in it. So when we flip over and start looking at the NASDAQ names, we see that we're down 17%, or 17 names are down at least 50%, that 0.5% that we're focused on. That those names in the S&P, they weren't financials. We still have our semiconductors, full list. And nothing else really stands out. So take it the other direction, since it's such a wishy-washy morning. How many names are up 0.5% this morning? 7 names in the NASDAQ, and they're China names. Not all of them, but top 2 on the list, JD and PDD. It fits in with that KWEB and emerging markets this morning. and only one name, two, for S&P above 0.5%. UPS, ConocoPhillips. So we're looking at the S&P 500. We don't want 500 names. We use the filter, adjust it by market cap, try to get it near 100. Don't have to be perfect. That's about 105. It's good enough. We got a lot of gray, which stands out. Remember, my benchmark is 0.5%. So I don't even really want to focus on names that have moved up or down in the pre-market unless they've moved at least that 0.5%. The color change here is the same thing. It won't change color to red or green unless it's moved that 0.5%. So I like to start out with it at its default setting like this. For a quick glance, makes it easy to spot things. Then we make a color adjustment afterwards, make it a little more responsive. But nothing really stands out this morning as a dominant theme or a thread to pull on. So we're going to adjust it, make it a little more responsive. The size of the boxes are adjusted for market cap. So the bigger the box, the bigger the market cap. It makes it easy to spot those monsters of tech, right? Even though it's not always tech names, it's just a name that we've stuck with. Microsoft, Apple, completely divergent on different sides of the zero line. Amazon, Nvidia, Tesla. Tesla's up near that 0.5%. A lot of that is an expectation of a rebound, right? Caught a little bit of support, rally up into resistance for the next rollover, and then continue that move lower. Morgan Stanley stands out a little bit in the finance. So we swap this from S&P 500. Look at the NASDAQ 100. Same thing. We don't need to adjust this using the filter because it's already 100 names. But without adjusting the color, the names that are lit up have moved at least that 0.5%. Chip names stand out as an industry, as a sector. The China names, PDD, JD. Netflix and Meta. Then we make that color adjustment. And it really feels more bearish than bullish looking at it this way. But the argument's still got to be made that all of these chip names that we see down is more of a response to what happened in MU than an idea that the whole of the market is down this morning. We're really not down that much. Meta is on the list for 2023 contrarian plays. It was a pretty good article on Seeking Alpha. All right, so we're looking at the weekly here with Meta. We got a really tight range, IX10. IX10 on a weekly. We're struggling with that 10-week. Should we break through the 10-week and we get out of this box? We got the 20-week at 132. Like we were talking about earlier in the week, that 20 line, that green line has been, a significant level of resistance, a very clear line in the sand. We haven't touched it. We've come close a few times, but we haven't even managed to touch it, let alone break through it. So I want to continue to leave this on watch. If it's going to be that contrarian play of 2022 or of 2023, it's got to get above that line, right? So no reason to jump the gun, get in early. If they're right, and this becomes the play of 2023, then there's a lot of room that, for it to run back up. You're not going to miss anything by waiting for a good setup. It's down this morning, so focusing on this box that we have here. If we don't diddle in the middle, then we need to play when we get out of the box, right? You kind of want to let it get at least that far. We're down to 118. Now split the mid between the bid and the ask, and we're sitting at around 118.60 something. So we're still very close to the close of yesterday. We're still sitting up here. No play yet. Looking at it on the daily chart kind of brings it a little better into focus. That orange line is the 50 line, but it has no value to us at this point since we've crossed through it many times already, and it's at this point completely worthless. All right, so we don't want to focus on that 50. Just want to maintain this judgment inside this box, right, between 113 and 125. So for a day trade, I mean, yeah, sure, we could focus on, getting an inside day breakout. Or an inside day breakdown, but we're a long ways from the bottom of that box. So, Meta doesn't look like it's going to be a very good play. Hopefully you guys took advantage of Apple yesterday, right? We had this discussion on this rollover and move up, focusing on this really beautiful reversal. Nice play. It gave a lot of it back, in the later part of the day, left that wick above. But still, all in all, it wasn't that bad. We're down this morning at 134.95. So we're sitting just above this 3-period moving average. We're right in the middle of yesterday's candle for a lot of these names, which is kind of cool. I like that better than being in the pre-market and seeing everything up 2% or 3%, because that kind of sucks. The market's already made a really big move, and then we got to try to figure out if it's going to continue that move or not. But in a market like this morning, when we're inside of yesterday's range in a lot of these really good names, the market hasn't made a big move yet. So if we can get it into the open before it makes that move, we have a better chance of running that move through the day. We got Tesla here. 138 is where we're at in the pre-market. So we're looking at a little bit of a red to green if we can get it. But at this point, that 3-period moving average is the line in the sand. We're nowhere near that, and we're still sitting inside of yesterday's price. We're down just a little more than $1 in Microsoft this morning, too. Still holding above that 242. Inside day, the 50 has no value to us. All the MAs at this point, other than this orange dotted line, which is the simple moving average 50, came down, rested into that, began our rollover, but we're still just sitting in this bigger picture range. And right now, sitting inside of yesterday's price. So we want to focus on as we come into the open is that we're going to get out of this box, right, for a good play. We're still looking at a lot of names that were, call it oversold or, that were just down. We're looking for that rotation with a swing up. Now, we're not talking about, the July-August rally or coming up off of that October low with weeks to the upside in the indexes. We're just looking at a short-term rally up off of a support level, very likely a rally into resistance, and then a continuation to the downside. So we're not expecting this to stick. This is the last full trading week of the year, too. So even though we keep talking about expansion, it doesn't owe us anything, right? It doesn't owe us a breakout. We could go into the rest of the week without leaving the range. This is the expected move for the week. We're still inside it. We haven't gone anywhere. We haven't done anything. And we're still waiting on that catalyst. This is a real bullish pattern here with the reversal candle and then the gap up. We talked about this yesterday morning, how there was no wick. This reversal play, unless it gets shot down by some news today or, some outside catalyst, we're going to expect it to play out and make the swing back up for the next rollover. Otherwise, if we do start heading to the downside this morning, we want to focus on getting outside the box, outside yesterday's price, close the gap, 38.21, and then work on the low of this latest swing, 37.95. Now that 3,800, 37.95, it doesn't really matter. We're not talking about pennies here. This whole area is a must defend level. They got to cover this. They've got to hold it up here. Because if we break this level, it's game on for a really good move to the downside. And the target on that is going to be this epic gap here. I know a lot of analysts will say as soon as you're in that candle, the gap is closed. That's fine. I'm not saying that they're wrong and I'm right. I just don't do it that way. As far as I'm concerned, we closed there and we opened here, and that is the gap. And the gap is not closed. 37.50. It's a nice round number, easy to remember. It's 3.27% away from where we closed yesterday. That's well within our reach. So if things do start to get rowdy to the downside today, each one of these are significant levels that we want to focus on. 38.40, 38.20, 3,800, and then 37.50. That's what I got, everybody. Be careful, be safe. Have a good day. I'll see y'all tomorrow.